Welcome back, and to our first story this afternoon. Even though the outlook for Ghana remains favorable, with growth expected to increase from 6.3% in 2018 to 7% in 2019 and will average around 5% over the next few years, our debt is set to be rising very fast, pushing the country into highly distressed level. Ghana's debt is expected to increase to 63% by the end of 2019, something investors are worried about. But with the government set to also issue another Eurobond in January 2020, we explore some teething issues in our debt in this Philip Namfori's report.
The size of an economy's public debt always raises debate among citizens. Issues of stock debate don't only relate to the size, but which governments increase the debt the most and the best way to reduce it. In a recent interview with Bloomberg, Managing Director Kristalina Georgieva of the International Monetary Fund disclosed that the fund is worried about rising debt in Africa, with about 40% of countries on the continent at distressed levels.
One has to always remember debt on its own is not bad. It is bad when it goes for the wrong things and when it goes with the speed that the economy cannot handle. Again, it really depends on country circumstances. But are we worried about debt levels in Africa? Yes, because about 40% of countries have gotten to debt distress levels.
Debt levels of African governments have increased rapidly since 2009 as they took advantage of the need to provide higher returns as the world was awash with low global interest rates. Ghana, a nation in West Africa, is no exception. In 2007, we burst onto the scene with our maiden Eurobond issuance, and since then, we have become part of the system of international borrowers. Ghana's debt now stands at 208 billion cedis, with a share of commercial borrowing such as Eurobond issuances increasing. Remember that the days of access to concessional borrowing has thinned and commercial borrowing holds sway because we are said to have become a lower middle income country. This simply means Ghana is seen by development partners as one that can raise enough revenue to take care of its developmental needs. In all this, one important thing to note is that commercial creditors may not be forgiven as the multilateral and bilateral creditors, as we experienced with the HIPIC and other initiatives. As the Minister for Finance, Ken Ofori-Atta, prepares to go on a roadshow in January with the expectation to raise some $3 billion in Eurobonds, for us here at Joy Business, going with the numbers, we will say our authorities may need to work harder to ensure sustainability in our debt so we don't burden generations unborn.
That was Philip Namfori's report, and the gentleman joins me in studio right now for us to discuss further the issue of debt levels. Good afternoon to you, Philip.
Oh, thank you very much.
Okay, great. Philip, I want to find out from you, why should the debt levels keep increasing?
Okay, Norman, let me start from some background. So, you know, at some point we were at a low-income country, and when we rebased our GDP some time ago, we pushed ourselves up into lower middle income, or the middle income bracket, if you look at the World Bank's income classification for countries. So with lower middle income comes a reduction in ODA, official development assistance, and that reduction means that where we were getting some sort of concessionary borrowing from easy money, that easy money has shrunk. So now we have to fall on our tax revenue, or we have to borrow. And borrowing itself is not wrong. Everybody borrows. As a country with large developmental need, it's not everything that you can take from your tax on and tax revenues or from development partners, but you can borrow also. And in 2007, we burst onto the international capital markets, the ICM, with our first Eurobond issuance in 2007, $850 million. Since then, we've been going there and we've been borrowing. But with this reduction in with a reclassification from low income to lower middle income, what you were getting first, you can't get again in terms of what you can get from IMF, World Bank, African Development Bank. The concessional loans are still available, but the conditions attached to them are changing. So we're also looking elsewhere for quick money, and the quick money comes with the borrowing, so with the Eurobonds. So you see that since 2007, we've been going on to this international capital market, and we've been borrowing, and things have been going on. So the borrowing itself is not wrong. But when we take these loans, the debate is always as to how we are using it.
That's what you use the money for.
Use the money for. Some argue that we need to invest in projects that will pay for itself.
Yeah.
One example is the former Minister of Finance, sDebtSituation. He always argues that if we take debt and we put it in infrastructure projects that will pay for itself, there'll be no problem.
So they're looking at projects like the Airport Terminal 3 that we have. You're talking of the Bui Dam. You're talking of even the hydro, that is the Sino Hydro project that we are trying to borrow some 500 billion from the Chinese for.
Okay, so that's true. One example, the Terminal 3, for example, the African Development Bank played a role in financing it.
Exactly.
So that project in itself will, over time, pay for itself. Some also argue that we should invest in projects with high social returns. It's not always about projects that will pay for themselves. Let's invest in areas that will allow an enabling business environment so that over time the economy expands and then we can pay for stuff like that. So the debt has been growing. African nations generally, like my report said, and even today, there was a story on Bloomberg that just told us that because of the stance of major central banks around the world, they are going to remain dovish. Dovish in the sense that they're not going to raise rates anytime soon. They are going to keep rates on the low. Investors are looking for places where they can get high returns from. Yeah. And Africa has been doing well. And to surprise you to note that for this year, African bonds, African Euro bonds, returned an average of 20.07%, higher than all other areas in the world. We did better than Middle East, Latin America, emerging Asia, Eastern Europe, and even emerging markets broadly. So there is hunger for yield when it comes to Africa. And when we go out to sell our Euro bonds, people will invest. So I can say, yes, there is a supply in the market. We have the demand. We are going out there. But now we need to focus on when we go for these debts. Sometimes you hear the finance minister saying he needs to do liability management. So we take cheaper loans to pay off more expensive loans we took in the past.
Because Philip, I was coming to ask you the question of where we are being told that the two items that takes a chunk of our revenues is salary and interest payments.
Interest payments.
And so if you know that this is the challenge that you have, if you raise even 70 billion and then about 70% or 80% of that will be taken away by just these two items on your expenditure, lineup. And it meant that, you need to keep watching it. One will say, yes, you've got into the middle income status. Should you be seen borrowing more? You have expanded the base in terms of your economy, rebased it, let me put it that way. And so you have room to borrow more. But is that what we should be doing, or we should rather be looking at raising more revenues in terms of increasing taxes?
I think we should do the two at the same time. Let's fix the revenue challenges within house. Let's ensure that we can raise more revenue, because it's from within the revenue that we are servicing our debt. And even with the debt servicing that you quoted, it's more or less interest payments that we're doing first. And if you check the 2020 budget, we are going to budget about 21 billion Ghana cedis in debt servicing. That's a lot. That's a real drain on our finances. And these are loans we've taken already. They're already in the system. So we go for more. If we're going for more, then we should ensure that the more we're going for is going to areas that we know that in the next 3 to 5 years, this is going to pay for itself. But if we go and take loans and we're going to do recurrent expenditure or consumption, that's where the issue comes into place. So I think that's the main debate. Let's try and find a common bridge where in fact, we need to borrow, Northern. We have development needs, SDGs are coming up, etc. The borrowing is not wrong, but it's the use of the debt, the transparency around it, and stuff like that. That is what comes into play, and that's what we need to put at the back of our minds when we are borrowing as a nation.
Very final, before I let you go, if you were the finance minister, you put up a 2020 budget, and it's for the very first time. Normally we'll go on the market somewhere March, April, there around, but this time in January we're going on the market. I mean, what would you have done? And you're looking for 3 billion. Would you have gone to the market, or you rather want to look in-house?
No, the 3 billion looking in-house, we're already having challenges with high interest rates in the country. If government comes in, and already some see the government as crowding out the private sector. So if we're coming in looking for such funds in there, we can get to the $3 billion. If we multiply, that's a huge chunk. So we need to go out. But when we go out, the timing, as I discussed last week with some of my guests on PM Express Business, the first quarter, they believe is the best time because elections are approaching. Investors are wary. And this article I was reading mentions the fact that investors are looking at us as we enter election 2020. So we need to have these things at the back of our mind as we go for it.
Thank you very much, Philip Namfori. He put together the report on our debt levels.